all right, guys. What is going on? What is good? What is good, man? Hopefully you guys are having a good day today. Let me know in the chat. Drop some ones in the chat if you guys are having a good day today. Let me know. Let me know. I personally, this has got to be relatively new. Rain white haze. Look at that. White haze. Not paid sponsorship. But white haze rain. So that is our breakfast today. So there is that. I'll yeah, I don't know where I was going with that sentence, but it's pretty good. So that's how my day is going so far. And yeah. Who do we got today? Ebernith, Marshall, Flacco, Monkey, Sergio, Mason. I think Mason had posted some good stuff in the chat earlier today, as per usual. Appreciate that. What's good? Julius, Eric, 2020, MJ, Jorks, Roger, Big James, Felix, Jordan the Savage, Marshall, Omar. Yeah, Julius is feeling blessed. Yeah, I'm feeling blessed too. I will be a little bit more blessed if we trade to the 70s. You know what I'm saying? Like, I'm already blessed, baby, but we'll just have a little bit more blessing. You know what I mean? Is that too much to ask? But listen, look, it's like what I should have titled the stream was bullish opportunities in bearish markets is really what it should have been. I just came up with that, but these are, to me, counter higher time frame. Counter higher time frame. Yeah, Ibrahim, I just noticed that too. 66.25. Good thing ES doesn't have 100 ticks per point, because then it could be 0.66 as well, right? For all the superstitious people, all the numerology people. So I don't put my faith in that, but you know, for some people it's a thing. Omar, you're blocked. Have fun in the future. Good luck to you, good sir. I'm just gonna keep my music where it's at. Before we get started, really quickly, I did want to show you some of the books that I got. So I bought them yesterday, and they came in yesterday too. I don't know about you guys. Yeah, Omar and Mason, y'all might as well just go start your own thing. All the band people can just get to, there was a band that did that. I think they were called Slaves, and it was a band that was created by members that were kicked out of other bands. So you'd have to look that up, but that's what I think. So you guys could start your own group. You got kicked out of SMS. I got kicked out of SMS. Let's just start our own thing. Right. MLM industry is fucking notorious for that. But we won't go there today. We won't go there. John, don't go there. Behave today, John. I'm going to do what I want. How about that? You guys cool with that? Anyway, see, this is the bullshit you guys do when you hop into my chat on this tomfoolery this early in the morning, or afternoon rather, excuse me. Someone from Metallica got kicked out and he started Megadeth. Yeah, I'm sure Ryan Holiday would appreciate that. He likes that kind of stuff. Anyway, let me show you these books that I got. I bought them yesterday. They came in yesterday. Uh, thank you, Jeff Bezos. Appreciate that. Appreciate that. Read that one in a book. Well, that's good, Mason. I'm glad one of you reads. Check this out. Co-Intelligence by Ethan Malik. I started reading this one last night actually. So far, so good. Co-Intelligence, Living and Working with AI. So this is like, I have another AI book. I don't know if I showed you guys that or not. That one's okay. The way that they're written, it's when people write books with or they publish them through major publishers, they really edit heavily, and the structures of the book is always the same. And so it's always like chapter 1 is the introductory and the history and all this shit. It's like, can we just get to the good shit, please? I'm not trying to sit here and go through all this history and shit. You know what I mean? All this fuckery. So anyway, let me just do one thing real quick. So I'm waiting to get to the meat and potatoes of that one, but it still is a good book. If you did not, I'm hoping it's going to be a good book. If you did not see it, it's Ethan Malik, Co-Intelligence. I got it on Amazon because it's on sale. Okay. Recursion by Blake Crouch. Recursion by Blake Crouch. This is not I don't think it's a self-help book. It's like a novel of some sorts. I don't always do this self-help stuff. I like them, but sometimes you got to switch it up, man. Sometimes you got to switch it up. It was either him or Robert Greene. Speaking of Robert Greene, I did finish Mastery. I don't think it was last night. I think it was 2 nights ago. So that was a good one too. And the last one is Super Bloom by Nicholas Carr. Super Bloom by Nicholas Carr. How Technologies of Connection Tear Us Apart. If Nicholas Carr sounds familiar to you, that's because he is the guy who did The Shallows, which I've talked about like on 1 or 2 occasions. And yeah, so that's like his thing, is how technology distracts us from everything and we can't pay attention to anything and we're all stupid, basically. So yeah, there is that. Okay, so anyway, are y'all ready to get to the charts? Are y'all ready to get to the charts? Drop some 2s in the chat. Here's what I like, here's what I don't like. Okay? Here's what I like and what I don't like. This is why I would title, if I could go back, I mean, I could change it, but I'm not going to, but I would have made it bullish opportunities and bearish markets. And this is why. So if we come back, I don't know about the basics, but recently we've been talking about how, no. It is the basics, right? Number 1, price trades to 2 things, liquidity and inefficiency. Do we all remember that? Price trades to one of 2 things. Sometimes it's both, but price will either trade to number 1, liquidity, or number 2, an inefficiency, a gap, an inversion, an imbalance, suspension, stuff like that, right? So one of the things that I have shown you when it comes to the market maker sell models, when we look at the sell side of the curve, when we are on the buy side, right? Or we can look at the inverse. We can look at the buy side if price is trading lower. Actually, Dow would be a good case for this, which is not usually the case. You know what I mean? But It is what it is. So when we look at price legs, okay, I'll come over here, for example. When we look at these lows here and then this rally higher, during this rally, 5-minute chart, okay, was there any sort of inefficiency? Yeah. You got like no wick right here. You got this little gap right there. That's an imbalance. And then I would just even go ahead and mark this thing too as a inefficiency. So it would depend on what price does there, right? But after that, okay, you see how we trade right to the low end of it too. Yesterday, oof, it was just like last night. Gross. Okay, what I'm talking about is right there. So you see how we had that imbalance, inefficiency, okay, on the way up. So price trades back into that. It does this. Okay, I know it's not the best explanation, but the point is we trade to the low end of it here. We actually overshoot that a little bit, and then we trade higher. So is there anything like within that that would stop price and turn it higher? And the answer is no. Okay, so whenever we get to time, right, whenever we get to the time aspect, okay, there's 8:30. Here's our equities. Okay, our equities open is here. You see that? 46,188 right there. So it initially, you know, has its first 20-30 minutes or whatever, does this, and it trades higher, okay, and it clears out some pre-market highs. Now I got to the charts when price was already down here. Okay, I slept in today, and now I usually don't look at it anyway, but I remembered that we had some lows. Okay, so again, when you already know that there shouldn't be anything to send price higher, price has no reason to go higher. There's no concept or anything that, again, is in this leg higher that would take price and then send it higher to, like, say, these highs up here. We have equities open low. It's an engineered low because we trade initially lower to go higher. So anybody who is long in here and price makes a new high, right, where they're going to place their stop? In a bunch of places, but generally speaking, there's going to be a pool at equities open low. Anyone who bought above this pre-market high to catch a breakout, where is their stop going to go? Generally wherever, but again, a pool of liquidity is going to build at the equities open low. Should we sweep that to go higher? Why would we? So again, and that's not even London's low, like I think that is, but that already has gotten taken. So London's low is already swept, right? So we have no reason to believe this is a sweep. We have a pool of liquidity down here. So price, if nothing's going to send it higher, then it's going to go lower. Okay. Now here's the only I guess here's the difference between Dow and the other indices today. Dow creates a high right here and then pauses just before that pool, trades higher into the range, meaning the range from that high to this low. It trades back into the range. It sweeps this high and then runs for that low. So that's an engineered low. That is sure as shit an engineered low. And it dives into that pool of liquidity. Not by much, but it still taps into that by a few points. Okay, so my point is, if it's not, if there's nothing that's going to send price higher, then it's going to go lower, and it's going to seek for liquidity or inefficiency. If there's no inefficiencies, it's probably going to seek liquidity. You get me? So when we look at price, okay, let's say even from this perspective, all right, We talked about 66. That's weird to say. 0.25. We talked about that at the beginning of the stream. Right? And I said I would rename this stream bullish opportunities in bearish markets, because again, let's go back to the higher time frame for a second. When we look at the higher time frame, this looks awful for longs. It just looks awful. Like, look at it. We diverged up here because Dow was higher, if you remember that. I don't remember, John. I never write shit down. Look at that. Boom. Wednesday the 12th, Thursday the 13th, right? That is a higher high on Dow. ES, look at that. Wednesday the 12th, Thursday the 13th, right here. That is lower. That's weakness right at the highs. So what has taken place? Thursday, we sold off. Friday, we did that. And with Friday's close, we left behind this imbalance. Monday, right, 2 days ago, what did we do? We traded higher, or excuse me, we opened to trade higher into this imbalance, sends price lower. What is it going to reach for? If there's no imbalances, and again, what is this? That's not an imbalance, right? There's going to be a pool of liquidity below that low. So it's like, okay, if it's not going to seek an inefficiency, then it's probably going to seek liquidity. You get me? So like FAFO Friday's low, October 17th low. So it looks bearish from the daily perspective. You guys with me so far? Drop some threes in the chat if you guys are with me so far. On the daily time frame, and there's a lot of wickage in here too. I don't know if I talked about that in the market review or if I talked about that yesterday. I don't remember. But there's no like bodies to reference. We're working within a range of a lot of wicks. Okay? So again, from a daily perspective, just looking at the daily time frame, this looks fairly bearish. It looks like it wants to trade lower. NQ, very, very similar story. We had weakness in comparison to Dow. It's not normal, but I don't make the rules. I don't print the candlesticks, okay? Same thing here, where Friday's close created that imbalance. Monday's candle, weekly open too. Trades up and into that, off of it. And it looks like, hey, it wants to run for that low. That was taken yesterday. And then possibly that FAFO Friday's low as well. So things look heavy. They look heavy. NVIDIA earnings after hours today. That'll probably shake and bake. That'll probably shake and bake. Now here's the problem, okay? Here's the problem. The lows on Dow that I showed you a minute ago, I think we're here. I believe. Right? Tuesday the 18th, right? Those lows here on Dow, right there. Boom. That was swept here, right? When we look at ES, the low from the 18th is here. And the low that we made during lunch about an hour ago, a little bit less, that only reaches below our equities open low. It doesn't even go to that low right here. It doesn't even do that. So when you look at this, market had traded higher, only to trade all the way back lower, right? Expansion higher, very short-term reversal, and then expansion lower. And then it takes the equities open sell side, right? It reaches below that by like 10 points roughly, maybe a little bit less, give or take. Okay, about 13. So when you look at this range, okay, from that high to this low, within that, okay, within that range here, who is in open profit? Shorts. Shorts. Whoever is short from up here, or in here, or in here, or in here, well, not here, but wherever current price is above this, right? These highs and anything above, anybody who was short as of like 11:30, 11:40, they're in open profit. So the stops that were probably up here, right? Again, when the market does like this, when it trades to an old low or below that old low, this is what people are seeing, and they're, you know, ecstatic. They're looking at their P&L and they're in open profit, which is great. So what do? They take their stop and they either drag it lower or go break even or whatever. And so to me, there's just a pool of liquidity there right here. So in here, it looks like, okay, that's not really a short-term low, but it's like, okay, we dip below that. We trade through these down candles here. We retrace, and now it looks like price wants to run that. But you can see my issue though, right? Like, it's a bullish idea in a market that on the daily time frame is bearish. So that's difficult. It's not impossible. I don't think it's the greatest probability, right? Because it technically is a counter higher time frame idea. But that's what I'm looking at so far. And we may not even do that, right? We may not even come up for the 6660s. If this is weak, see, Nasdaq is garbage. See, look at Dow here. It actually traded back above equities open. And ES has not been able to do that. So this may even continue lower, make a new low of day. So that's kind of where we're at. Or it could just sweep, like, say on a 1 minute time frame, it may just sweep some of these lows, take out anybody who is long from down here, and then run. It's just hard to say. Okay, it's a bullish idea in a bearish market, and that usually doesn't go well. So we'll see. All right, you guys with me so far? It looks good. The low resistance highs are there. The liquidity sweep is there. It's just counting higher time frame. And that can be difficult. Do we have any questions so far? Today being Wednesday is going to be very similar to last Wednesday, where I really don't have too much for you. So this may not be a full hour stream if you guys don't have questions, because I'm going to be out of stuff for you. Okay. I don't know the things that you have questions about. There's 60 of you on here. Everyone's at a different level of experience and level of knowledge. So there's something that I'm sure you're unclear of. Oh, you know what? That reminds me. None of you reminded me. You're all fired. Someone asked yesterday, and I totally read your question, and I forgot to ask. I mean, I forgot to answer your question. The indicator that you asked about that displays the macro times is called macro timeframes with opening price. And if you're in our Discord, I think it's pinned in the general chat. So you can look it up, or you can go in Discord. If you still can't find it, then go in our general chat and then ask, like, hey, John, can you post the indicator? And I'll do that. So I didn't mean to skip it yesterday. Again, I drink a lot of caffeine, okay? So I might skip things. Or I might answer the question in my mind, but then I don't actually say it. You know? Y'all ever been like super stoned before? I know Mason has done this. I don't know if Willow's here. I know Willow's done it. Y'all ever been so just incredibly stoned? You pulled up to the drive-through and then they were like, hey, you know, how may I take your order? And then you gave them the order. And then nobody said anything. And then they're like, hello, can I take your order? And you said it in your mind. Oh, I want the number 3 large with no pickles. But you just never said it. You answered it in, yeah, y'all know what I'm talking about. You said it in your mind, but you didn't say it out loud. Because you were that fried. Don't act like y'all haven't done it. So that's kind of what happened yesterday. What's the name of that indicator? I was like, oh, it's the macro time frames. Next question. Next. I was going to go watch videos you have on low resistant highs and engineered highs and lows. I was confused on the difference. I can clear that up. No problem. Mason said I quit 2 years ago. Hey, props to you. Props to you. But you definitely been there? Yeah, see? Y'all think I only have experience in the markets, baby. I'm in my I'm about to be 32, bro. I got some life experience in me, all right? You think you just get this beard overnight? So, anyway, what is the difference between low resistant highs and engineered highs and lows? Okay. So, Dow is going to have a much... That's NQ. Dow is going to have a much better example for today, okay? Whenever you have a pool of liquidity, okay? Whenever you have a pool of liquidity, whenever, let's say lows, okay? Whenever you have a set of lows, whenever the market comes, and it doesn't always do this, but whenever it trades lower and then makes a low, right? Very close to those lows, that is an engineered low. Okay. The market, it does this really often. It usually will create a short-term engineered low or a short-term engineered high just prior to a higher time frame pool of liquidity. Because what is happening is the market is generating liquidity on the small time frame and the large time frame. So it just builds more liquidity. That's why it's called engineered, because the fucking market's engineered. We talked about this yesterday. It ain't fucking supply and demand. Okay? Everybody and their mom doesn't just come in and buy it right at those lows at some weird ass fucking spot and then the market trades higher. No. The algorithm is taking price and stopping it just shy, because there's buy orders all in here and below it, and it just somehow randomly stops like 1 or 2 ticks, sometimes a few ticks or a few points or a few pips, whatever, and then rallies higher, right? It gives that false sense of the low being set, because again, like in speaking in a general sense, oh, that's a demand zone. Well, where the fuck do you even draw this supposed zone from? Is it the bodies? Is it the wicks? Is it price levels? Is it fibs? Is it fucking, what is it? Nobody knows. Okay? You ask 100 S&D traders what the zone is and you get 100 different fucking answers. Okay? Sorry, I know I've been cussing a lot. I'm trying to work on it, but whatever your zone is, right? It comes into that zone and then rallies. Oh, it's bullish. It's bullish. It's bullish. Right. So then everybody buys it. Everybody comes in. They buy it. And then where does the stop go? Oh, that's the low. Then they get wrecked. Then the market goes that direction. They go, oh, what the fuck, man? Right. Because this pool on Tuesday was already created with that rally higher generated. Overnight, let's say after hours like Asia, let's say London, and then even equities open. So you had a couple different sessions that traded higher generally, and then especially equities had rallied. So people think the low has been set in when the market is here, right? Making a new high. Oh, it looks bullish. Right. It looks bullish, but looks are deceiving. You guys know this. Looks are deceiving, or can be deceiving. So where are the stops going to be? Right here. And in this, with that low to go higher here, right? It's sweeping this short-term high to go lower. And it's also generating people who want to buy it within that, 20, 30 minutes or whatever to put their stop at the most recent low. Then it goes for the higher pool and the smaller pool at the same time. Do you guys see what I'm saying here? Like if we took everything off, the engineered low is right there. 45,989. We'll just make it purple. And then we'll make the higher pool pink as per usual. But look at this. Look at those two levels together. They're 1 point apart. Oh, ES. Where the fuck did she go? All the buyers came in. All the S&D traders hopped on my stream and said, all right, we're going to buy that bitch. Oh, John said it might sweep the lows and go higher. All right, bet. We're going to soup that bitch. Yeah. It's algorithmic. All right. But anyway, my point is, teaching with live prices per usual, but my point is it's a small pool and a large pool very in proximity. Okay. It's in proximity. They're close. Small pool, high pool. That's what an engineered low is. Now, this low by definition, okay, and this is why we don't take concepts and try to cookie cutter approach. We don't just take the concept and jam it somewhere on the chart and go, well, yeah, that's a 1, 2, 3 formation. Oh, that's the Judas model. Well, it might be a Judas in the short term. These are short-term highs. And we do get, well, we actually get like 4 lows, but there's like a little gap right there, intermediate term low, and then down candles being traded through, and then boom, we trade higher. Like, oh, okay, yeah, that, I guess. But otherwise, that 1, 2, 3 formation gets yoinked. It's like, oh, well, that's supposed to be high resistant lows, John. You said that was a stop loss. Yeah, usually. But the problem is, you're trying to take these little drawings that I give you or that other people give you. You're trying to take a model, right? Like the mitigation model or whatever. I think the law of simplicity, right? KISS, keep it simple, stupid, the law of simplicity. And I gave you like a really simple model, drawing rather. You can't take that and then just toss it everywhere and be like, this has got to work here. This has got to work there. No, you have to align your higher time frames with the lower. The lower time frame you might think is bullish, but the higher time frame, there's a pool right there and you're missing it. The map is not the territory. The map is not the territory. That's a mental model. That is a mental model that I also gave you in the mental models for traders video for free. The map is not the territory. Not that I am trying to go on a rant here, but if you're looking just at this, if this is your screen, right? This is your monitor, and this is all that you're looking at. And yeah, that looks like the Judas model, which I mean, I'm not going to say that it's not, it is, but that's very short term. This is like 10 minutes, 20 minutes, not even, right? This is short term stuff here. But if you do not have this higher time frame pool, you're going to get fooled, bars, in thinking that this is the low and that's going to, be it. And then we're going to, go balls deep in a fucking long because we're trying to pass a combine or some shit. We're trying to get our losses back. And then, bam, you get wrecked before the market goes higher. Those are high resistant lows. But that last low is engineered because it is a low just prior to a higher time frame pool. Come on. Okay. Once both have been taken, okay, watch this. Watch this here. Once the small pool and the high pool, higher time frame pool, have been taken, right? Then then the low has been set, then we get an intermediate term low, then we get a retracement and we send for higher pricing, right? You remember, did we get that gray box? No, we didn't. Oh, the market's scamming today. The market is scamming today. What is that box? None of you asked. It's just this imbalance here. I figured if we're going to go for those highs, then we may extend as far as that imbalance. But like I already told you earlier, this is a bullish, like short-term bias in a market that is overall bearish. So we didn't even get the 70s. So technically I was wrong. We did get 66 60s, but we didn't get the 70s. So half right, half wrong. Who cares? But does that answer your question? Low resistant highs and low resistant lows. Okay. Those are targets. The engineered high is the high that forms prior to the target. The engineered low is the low that forms just prior to the target. And that's its function, okay? It's to dupe the S&D traders. It's to dupe retail traders. It's to bamboozle. It's to hoodwink. It's to finesse. It's to finagle. It's to wreck the majority of traders. That's what it's designed to do. That's its purpose. That's why it does that. That's why it's algorithmic. Okay? That's why we can be pretty precise. I may not always be super precise, you know? It may come down for the lows to go higher, or it may just hit the mitigation and run. I don't always know, bro. Okay? I don't try to predict that many moves. Okay? But the point is, right, we built a narrative. Why should the market trade to the 6660s? Why should it do that? And I outlined it for you before we even got there. I do this all the fucking time. Because that's how repetitive these markets are. Why are they so repetitive, John? Because it's fucking coded to do this. Because it's not supply and demand. It's algorithmic. Okay, so hopefully I've made my point the last couple days. And I don't always get it right. Sometimes I mistime it. Sometimes I may not pick the high. It's fine. This is why getting to the target is at least a partial, if not majority, and break even or stop in profit. Okay, just in case it doesn't get there, and then it comes back to at least stop you out in profit, or, you know, not get a loss. Okay, but we talked about how what has taken place, you know, up until 11:30, from 9:15, the high of the day, down to about 11:30, 11:40. The market dropped like 70 points or so, whatever that is, 80. Right, the market from the high was down about 80 points. Shorts are killing it, which is wonderful. That's great. But if you hold on too long, the market's going to come back for trailing stops. That's why it went there before it went. That's why I told you it's going to go there, or it's likely to go there before it did. That's exactly why. Because the markets trade from what to what? Liquidity to or they seek liquidity or inefficiency. Okay. Do we have any inefficiencies? Yeah, we do. And that was already traded into. Right? So we got sell side here, and right here too, but we got mostly sell side, almost no buy side. So if we stretch that over, the market does provide buy side more than once. It gives us buy side and sell side. And it generates these lows, which we came down for. Okay, all of them, right? And it trades below them by a couple points, right? 45.5 down to 43, right? So a couple of points, right? And then watch this, okay? Watch this shit. You don't think it's algorithmic? Watch fucking this shit. That down candle right there. Look at that. Down candle. Took all those lows, right? Wick right there. Bam. Shifting the state of delivery. Comes down perfectly. Perfectly. There's no perfection, right? Where are the bodies stopping and opening? Right at the open of that fucking down candle. Look at that. Look at that. Look at that. Markets aren't ran by an algorithm. The markets aren't manipulated, bro. The markets don't seek manipulation. They got other shit to do. Okay. Well, then what is that right there? And then all of a sudden at 12, what was that? 32, 33. Do. Corvette candles right to the price level I outlined. What am I, fucking Houdini? Am I performing magic tricks over here, bro? No! My hand is on my mouse. And my other hand is just chilling right here. There's no rabbit out of the fucking hat, dude. There's no crystal ball. There's only caffeine, baby. That's it. That's the secret. Okay? Tangerine juice and caffeine. That's all you need, really. That's all you need. That is all you need. Anyway, my point was, if there's no inefficiencies that's going to send price lower, it's going to go higher. It's that simple. The markets can be that simple. You don't think, because you're trying to look at all this shit, all this stuff that has no relevance on, or has no influence on price delivery. Has no bearing on price. Doesn't move price. So, anyway, sorry. I don't know why I keep going on these tangents, man. I gotta stop. I gotta stop doing. I gotta be more professional than that. But it's just, it irks me when people that are way more popular and have tons, they have like 10, 20x my following, but they're putting out these ideas that the markets aren't manipulated, that it's supply and demand and all this stuff. But you don't see them being precise like this. It just irks me, man. How are the markets not manipulated when we literally talked about, it might sweep that and go higher, when we were right down there? Go back to the recording at 12:25 and 12:30. There is look down here on your screen. Look down here at the bottom. There's a timestamp right there. You can literally go back and watch the stream. We talked about that. And it does that. It's precision. So hopefully that answers your question, Patch. I don't think I've ever spent so much time on a question before. But anyway, you always with your eyes on a chart when you're in a trade? No. I mean, I'm a person too. Sometimes I want to read a book or go to the bathroom or, I don't know, do stuff, drive around, bullshit. Like, I'm not like, all right, I'm gonna take a trade and I'm just staring at it the whole time. I might look at it for the first few minutes. I want to look at order flow and stuff like that. But I'm not sitting here the whole time looking at it. So, narrative. Someone asked about, I think Mason asked about narrative. Well, these textbook definitions are pretty dog shit. So, narrative, I don't really use that word that often, but narrative is, to me, is just a different way of saying context. So let me put it to you this way. So time is, we talk about time all the time, right? The market will move when it is allowed to do so. It's not going to move whenever, some random indicator crossover ding dong shit. Okay, it ain't gonna, it's not gonna do that. The market's gonna move when it's allowed to do so. It doesn't always, make a low during a macro or sweep liquidity in a macro, stuff like that. But generally speaking, it's referencing pools of liquidity as it relates to time. It runs short-term scripts that do certain things. Okay, that's time. That never changes. Price is going to be stuff like the actual concepts, the actual price level, so like the zeros, 20s, 50s, and 80s, the inefficiencies and stuff like that. What is price action? What has it done? What is the open, high, low, close? Okay, so that's time and price. Context is what I told you earlier. Why should the market trade above those highs? Because the market has been trading lower and lower and lower. We met not necessarily a high pool, but we did meet a pool of liquidity. One of them that I've taught you over and over and over again is equities open. It's a short way, just like when you say PDH, previous day high, or PDL, previous day low. When I say equities open, what I'm referring to is the lowest low and the highest high in the first 30 minutes. That builds pools of liquidity. Now, right at 9 o'clock, and then a few minutes later, we continue higher. I wouldn't really consider either one of those a pool of liquidity because we've already traded higher. The pool is going to be down here because the market has actually, this is some Corvette candles here, but we printed some up candles. We just hit some highs. So a lot of people think this is going to be bullish. And anyone who's already long is going to have stops down here. That's narrative. That's context. Why should the market trade down there? It's a pool of liquidity. Once that pool of liquidity has been absorbed, right? It's not going to go back to that low. Does it go back to that low? No, it hasn't done that. We're at the 60s. This is the 20s. We haven't gone back to that low since. Why should it trade to 66, 66, 25? Because like I already outlined, that is what's a slightly lower high, but anybody who has been short is going to have their trailing stops here. That's why the market should trade there. Its context is why. To me, the narrative is why should price do that? And that's one of the most subjective parts. I think I covered this yesterday. That's one of the most subjective parts. That's where people agree or disagree on certain things. This moves the markets. No, this moves the markets. No, this does, and all this shit. You know, and anybody can, I guess, have their own opinion on why they think the market does what it does. But at the end of the day, it's about you and the trades that you can take if you can be on side. You see what I'm saying? If you can buy before the majority of the move, or if you can buy when the market is bullish, you're going to take good trades. And that's what it's about. It's about being on side. So does that answer your question? To me, that's what narrative is. Thank you, Oscar. I appreciate that. Sometimes I juice the tangerines. Most of the time I buy them. Shifting the state of delivery can be that fast? Yes. Yes, it can. Shouldn't we look for a shift in the state of delivery after liquidity, imbalance, and inversions? So here, I'll answer this to you for you, Fernando. There's a video I did a long time ago. There's two ways that I know. There's probably more, but there's at least two ways of finding a change in the state of delivery or a shift in the state of delivery. And number one is what I showed you earlier. Right here, that down candle, okay? That was the last down candle in this sweep of that low, that one, and this one. This is 4 different lows here. I always mark the lowest one. The lowest one. Okay? That down candle, it does get traded through here, but it closes here, which is usually better. You don't always have to have a closure. Okay? Just like with these bitches out here. All right? Sorry, ladies, but that, to me, the close is a stronger indication of a shift in the state of delivery. And then we trade back into that right there. Boom. That is the long. Stop at that low. Rally for the high. The other shift in the state of delivery is with an imbalance. Right? So you have an imbalance here that traded into here to go lower. Right? It saw some response, but then it got traded through. So it ain't bearish, it's bullish. And that doesn't even give an inversion. It just sends higher. That is the main idea behind the Judas model. Okay. Now sometimes the time frame won't give it to you. Like down in here, we really don't have that. But like this right here, that imbalance with that gap right there, that right there is a shift in the state of delivery to me. It doesn't always mean that it's going to come down to give you an entry. It never comes down to that inversion. It doesn't do it. Next candle, no pants. It just trades higher. Right. So it does come down for that lack of wick, but it doesn't come down for the inversion. So that is still a good long position. And it's an overlap of that old low. See that? Right there. Swept the liquidity, traded higher, and then there's your first retracement in a reversal. Oh, where have you heard that before? Right? The first imbalance in a reversal should be left open. So the first retracement in a reversal shouldn't go to the low end of this. Boom. Wow. The more you know. The more you know. How many trade setups do you usually aim to get a week? So it really depends on how many assets you're looking at and which time frames you're looking at. I would say at a minimum, at a bare bones minimum per week, I would say at least 3. The markets are going to give you some nasty setups at least 3 times a week. Minimum. Okay? You saw, I didn't say anything in the Discord down here. I didn't say anything after that. So, you know, I'm not going to say like I told you so. I didn't. But we did talk about those highs, right? And there was an opportunity within that here. That is a pretty good opportunity. Is it the biggest trade? Are you capturing the whole day's range? No, you're not. This is more of a scalp. Still a good opportunity. Shit, dude, I forgot what we even did yesterday. What did we do yesterday, chat? Didn't we talk about these high? Didn't we talk about London's high? Oh yeah, bring that ass here. London's high. You remember that? We talked about that yesterday. Mitigation. Oh yeah. That was with see, chat. I'm getting older. I'm getting too old for this shit. Getting too old. Let me see something real quick. Boom. Remember that? What manipulates usually mitigates. Then we got that mitigation. And then all that stuff, the low, high, higher low can also act like a mitigation to go higher. That's a good opportunity down here. Or if you got, like, I don't expect you to do this, but if you got in right when I tweeted, you know, that's like that to me. The banger is the lower one. The scalp is the higher one. So to answer your question, the market's going to give banger setups all the time, at least 3 per week. I could probably argue it's like probably 5 to 10 minimum, honestly. But I want to be safe and go with 3, so I don't give you, you know, like a really, really high expectation. Like you have to trade every day. You do not have to trade every day. You do not have to trade every day. Okay? But if you study, if you study Monday, Tuesday, Wednesday, Thursday, Friday, every single week, if you study every single day, you're going to realize, do that for like 90 days. Okay? Study, print off a chart, or at a minimum, save one chart of whatever. It could be a currency, it could be a cross pair, it could be whatever you want. Okay? If you look at it every single day, you don't have to trade it every day. You don't have to say, you don't even have to have a bias every day. Just print off a chart, mark it up every single day, Monday through Friday, for the next 12 weeks. Okay? Do that. It won't even take that long. After like the 3rd week, meaning like probably somewhere in the middle of week 4, you're going to realize, oh shit, these markets really are abundant. I don't say stuff in the Discord every day. I definitely do not tweet every day. I don't say things every single day. I probably could. I would be wrong sometimes, yes. But you have to realize the opportunities are endless, man. They happen all the time. All the time. So there's your answer, Oscar. I would say at least 3. It's probably closer to like 10, but a safe number is to go with 3. You take 3 bangers, that's it, and just be done. And if you don't get the banger, you can at least get the scalp. Doesn't count as a banger, but it still grows the account. Okay? So is that cool, Oscar? Drop some, what we do, 3? Drop some 4s in the chat if you guys have had a fun stream so far. We're pretty much done. It's 1 o'clock. But I love the questions. Hopefully I gave you some good answers. And I'm not sure how much we have left, but drop some 4s if you guys had some fun today, if you learned. I know I've been cussing a lot. I got to work on it again. I'm sorry. But I get so excited about this stuff, dude. Like I really do. And sometimes the excitement just gets the best of me, man. I've been testing and trading a bit more different recently. I sort of have 2 strategies now. One that's more aggressive and fast, more like scalps. This strategy I use for passing accounts just to pass. I learned a lot. Scalps are low-key very good and high probability when you're watching all 3 indices at the same time. Right. Right. You don't need the entire range. You don't need the low risk buy. You can take scalps. You take a couple of scalps and that's going to be a big move, right? This was an 80-point run. Okay. But if you caught, let's say, a 20-point move 4 times, there's your 80-point move. But you don't want to take it because you let your ego get in the way. Well, I can't show that off on social media. Man, fuck social media. Who cares? Trade for you. Trade for your combine. Trade for your funded accounts. Trade for your live accounts. Trade because you want to make money. Who cares what everybody else thinks? Who cares? Doesn't matter. Do you think I'd be here if I listened to everybody else? You think I'd have a fucking sports car at 31 if I listened to what other people said? You gotta listen to people who have the shit that you want. You gotta listen to people who know what the fuck they're talking about. And if you don't know shit, you should shut up. If you don't have shit, you should shut up. Okay? Again, I just feel like ranting so much today. I don't know why that is. I just woke up today and was like, you know what? It's a good day to spill the beans, baby, and just go in. I don't know why. I don't know why. It's got to be Robert Greene. I was reviewing his book the last couple days. It's got to be Robert Greene. His stuff is just too good, man. I wouldn't say this. I wouldn't say the social media entry, but it's okay to get good entries. It's okay to get late entries. Okay? There's nothing wrong with that. The problem is not with the entries. The problem is with the ego. If you let your ego run your career, you're not going to do well. You're not going to do well. You have to humble yourself. I'd rather take a 10-point scalp or a 5-point scalp on ES than nothing at all. You know what I mean? So I feel like that's a pretty good note to end it on. Would 50 pips be considered scalps? Well, that depends on, I guess, what measure, like what asset you're looking at. 50 points on Euro is probably not a scalp. 50 points on GBP, JPY maybe could be a scalp. I don't know. So a scalp is just a short-term trade. Okay, it's a small trade. It doesn't last very long. You know, it's a scalp is what it is. I mean, the name is horrendous. I mean, what do you think it comes from? You know, the Native Americans when the white folks invaded the U.S., right? Or when the white folks invaded what is it? The Northern Hemisphere or the Northern continent, whatever the fuck it is. Today's America, right? And the Native Americans, when they caught some folks and they literally took a knife and scalped them, bro. That must have sucked badly. That must have sucked. But that's what it is. It's just a very small piece, right? So if you're in and then catching only part of a move, to me, that's a scalp. Right, Oscar? You got to know your history, man. Right? We got to remember our history. America has a very dark history, in case you guys didn't know. Okay? I think America's great. You know, I think we could be better, for sure. I think there's plenty of things to improve on. Absolutely. But my God, if you look into history, bro, we have a dark and violent history. So now we got to end it on a fucked up ass note. Y'all be good. Be good. Be blessed, man. Be grateful for the things that you have. You will not be given more until you can handle the things that you currently have. So be grateful. All right. Be grateful. Return the shopping cart. Don't be an idiot. Do good things and treat other people how you want to be treated. We won't be here on Thursday. We will be here on Friday. Okay. So I'll see you on the 21st.